Stocks are soft but remain in a range ahead of the union budget on Sunday. Metals, energy and IT are the big drags while healthcare and industrials eke out gains. Copper prices slide after the Chicago Mercantile Exchange revises up margins on trades by 20% following an over 40% run-up in the metal this year. An over 13% seesaw in gold also spooks investors. Metal stocks slide across the board. Shares of Swiggy have taken a beating after it reins in growth amid a discount war, while Manappuram Finance slides as it continues to grapple with the microfinance stress. But Dixon Technologies gains on hopes of a Vivo deal, and Nippon Life AMC climbs on asset growth and market share expansion. And while there aren't any expectations of big pronouncements in the upcoming budget, as significant reforms have already been undertaken, there is hope of some revision in long-term capital gains tax to draw foreign capital. Will the finance minister bring cheer to the street? We shall know on Sunday. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Patakia. The final 90 or 150 minutes, shall I say, before the markets take a bit of a pause tomorrow and then ahead of the big union budget presentation on Sunday. We've been in this 50-point range ever since the morning session, or actually ever the last couple of hours. The fall until 25,250 gets bought into, and the moment the index crosses 25,300, selling pressure emerges, as has been the case as of now. Still 140 points lower, giving up some of that 350-60 odd point surge that we had seen on the index over the last three trading sessions. Couple of earnings reactions. Strides Pharma just came out with numbers. That stock is reacting to those, and margins have expanded on a year-on-year basis as we speak. So 150 basis points expansion in its margins. Revenues were flat. EBITDA too was up 12%. The stock now trading gains of around 2.25%. Also watching out for numbers from Bajaj Auto. They'll be reporting numbers in just a bit from now. So that is one stock you need to keep an eye out for. Also keep an eye out for Nestle. That too, usually numbers for Nestle are out by this hour. They aren't out as of now. The stock still holding on to gains of around 1.25% as we speak. Some of the other names reporting results today. Nalco is one of them. Almost 9% lower now as we speak. So watching out for numbers from Nalco as well. Continues to remain at the day's low, and that is the story for the metals sector across the board. The Nifty Metals Index is down almost 4%. So if you look at Hindalco, Tata Steel, all of them, in fact, the metals index is now down 5%. So even the losses are now extending for a lot of these metal names. Even Vedanta, despite the positive brokerage commentary, has fallen prey to the selling pressure. But a whole host of other names are also reacting to their third quarter numbers. Gaurav is joining in with more on that. Gaurav.
Well, yes, if you look at the numbers, first let's talk about MTAR because good set of number is what we saw from the company. We saw margin expansion to 22%, and at the same time, company also guided FY26 guidance to EBITDA margins to be in the range of 21 to 23%. Other than that, let's also not forget about ITC. Now, the numbers were good. The key positive was that the strong performance from the core business, and at the same time, cigarette volume. Now that came at around 6.5% versus the expectation of 5 to 6% growth. So that was something which is actually supporting the stock here. Dixon Tech, again, we saw numbers which were actually in line with the street's expectation. But what is actually worth highlighting is that the profit. Now that increased almost by 68%, and that is something which is steering the stock right now. On the losing side, first let's talk about REC. Now, if you look at the numbers were a bit flattish, and at the same time, a key negative here was that loan book growth. Now, the loan book growth stood at just 3% on a year-on-year basis. Remember, management was guiding this growth to be around 12%. Now, there were some prepayments as well, for which the clarification is still pending, but at this point we are seeing market is not actually taking it in a positive way. Hoodco, if you look at the numbers, again, numbers were flattish despite loan book growth which was strong at around 31%. If you look at net interest income, that came down almost, that actually increased by 4%, but the profit declined almost by 3% on a year-on-year basis. Lastly, let's also focus on PTM. Inline set of number here, but if you look at the PIDF incentives, now they are going to be missing from the company, and that is something which is hurting the stock right now. Apart from the results, let's also not forget about Aurobindo Pharma. There was a positive news here that government is going to introduce 1-year minimum import price for some of the drugs, and from here, now management, although it is positive for the company, brokerages are also positive. Investex says that this can actually drive the re-rating of the stock, and that is the reason why we are seeing some uptick in this counter as well.
Gaurav, thank you for that. A whole host of earnings reactions, news flow driven moves, all of them are right on your screens. But the other major talking point over the last few hours has been the very, very wild swings seen in both gold and silver prices. Now, they are down as of now. Some profit booking that has been emerging from higher levels. Silver now down 8%, gold down 4%. But the bigger story is the fact that they have corrected significantly from their peaks. Gold prices at one point had almost touched $5,600. Silver had crossed 120, and then they have cooled off from those levels. Now, there was this parabolic move that has resulted in gold surging nearly 30% this year itself. On MCX, gold opened lower at around 1.6 lakh rupees per 10 grams compared to a previous close of 1.8 lakh. Meanwhile, silver has seen even steeper losses as we speak. Now, this after hitting record highs in the previous trading session. A time for a short break. Just as we do that, here's a sneak peek into the stocks that we'll be addressing on your stocks. Don't forget to catch fundamental and technical experts share their views on all of these names on your screens, and of course a lot more. Karur Vysya Bank, Kalyan Jewelers, of course, the stock in the news. Can't keep it out of news. SBI Cards, Godrej Agrovet. Views on all of these and a lot more in just a few minutes from now. Take a short break. Be right back. Welcome back. The economic survey is often read to check if there are any hints for what the budget may support which sector through its policies. Lata, who has gone through the entire survey, is here to share some hints that she's picked up. Lata, tell us more.
Well, one can pick a lot of hints from many chapters, but I think this is a chapter that was very important. It's the 16th chapter, pages 630 to 653, titled From Import Substitution to Strategic Resilience and Strategic Indispensability. It seems to give an idea as to the sectors which the government may think is important if it follows the survey. So what this chapter argues is that let us not be naive, globalization has ended, and therefore we have to go Swadeshi or indigenize for some industries, some vital ones. But we have to do that without encouraging inefficiency. When you give protection, because there's no foreign competition, industries become inefficient. That's what happened to India in the 70s and 80s. And therefore, the protection must be given with some production targets and upgradation targets. Very vigilant, and it must have a sunset. So now the key thing for the market is, what are the industries or sectors or products that the government thinks may want this protection? The survey builds this, tier system. It has 4 tiers on the basis of how vulnerable India is if it didn't have some products, and where it is feasible. That, if you're good at it, but because of some historical reasons, we have not scaled it up and become export competitive. Those are the 2 top tiers which need protection. So tier 1, which is non-negotiable, because these are goods which are absolutely essential to us. Here we can support by procurement, given demand assurance and of time-bound support or import protection. These are oils and pulses, of course. Procurement over there. Fertilizer inputs. Remember, China had stopped some special chemicals used in fertilizers. Therefore, fertilizer inputs, we should be self-sufficient. APIs, power electronics, industrial chemicals, and telecom equipment, because telecom equipment is national security. So here you have to give protection. These are non-negotiable. Then there is strategic core, where we can, get into global supply chains, etc., where we have an advantage. Here, the government should accelerate scale building, but give temporary and targeted support, okay? Tie it up to production targets. These are magnets, batteries, cells and cathodes, solar wafers and cells. Then there are other, tier 2 and tier 3 industries, which they talk about, where we are not vulnerable, where you should not, give protection. In fact, if you gave protection, it will become expensive. It's better to import where things are cheaper. So of low strategic importance, cranes, industrial machinery, EV drivetrains, medical devices, and even others which have a long horizon capability, important, but we don't need to give protection now. TBMS, rail signaling, defense electronics, electrolyzers. Now, not everything in the survey actually becomes policy, But for those in the market who are looking for hints, maybe some PLI-related support can be given to those tier 1 sectors that I mentioned.
And we shall find out soon, in just a few hours from now, when the Finance Minister rises to present her 9th consecutive budget on the floor of the House. Lata, thank you for summarizing that for us. The numbers of MOIL at the bottom of your screens. Profits down 17%, but the operational performance is the bigger takeaway. Margins have expanded 100 bips from last year to 27% from 26. The stock, though, has taken a bit of a knock because revenues were down 2% on a year-on-year basis. So 5% lower now on MOIL after the results announcement. EBITDA up only 2% as well from last year. Now at CNBC TV18's Budget Vision 2026, top policy makers would share their experience from the union budget and are expecting a big increase in defense spends this year. Listen in.
Easy to say that there has to be and there would be an increase in the defense outlay. You can say it, but there is a constraint, the overall constraint. So how much the government will have the legal space to allocate higher amounts for the defense, whether it's 10% higher or 15% higher. But I don't see any possibility of it being beyond 10 to 15%.
The current year budget allocation is definitely going to be much higher than the previous years, and the growth in capex is definitely, in my understanding, going to be around 15 to 20%, and there is scope and potential to be a higher figure also.
Higher than 20%?
Yeah, because if the industry is ready, they are able to deliver what has already been ordered. The final expenditure outgo is going to be quite heavy, considering the type of platforms which are on order.
Government has very admirably kept up the reform stream on, the GST reforms or deregulation. These are the kind of things which will protect the fiscal stability as well as give the necessary impetus for growth. More than spending on the government side, I expect more of reforms, both on financial as well as non-financial side. And from industry, one expects more of investment.
More of investments. But on the reforms that you spoke of, what would you be penciling in this time around, both financial as well as non-financial?
I look at more financial reforms, more of deregulation and more principle-based regulation rather than prescriptive regulation.
We also spoke to Venugopal Gare, the Managing Director and India Head of Research at Bernstein earlier in the day, who told us about his expectations from the budget.
I do believe the defense should be probably higher than the 10% number, right? So 15% plus is ideally what should defense be in terms of the expenses. My view broadly is that defense is appearing as more a secular area, which means this is not a one-off expenditure growth. There is a room for this sort of an expense growth to continue for at least a couple of years. So in that sense, I would probably say that I'm a bit more positive on the defense pack in general. Certain tweaks, especially around LTCG, is probably warranted. It's not a very large quantum, especially the equity side of things. Probably government could have bands a couple of years down the line. So if you have more than 3-year hold or 4-year hold, maybe have the differential, taxes. I'm not expecting too much on consumption side of things. We've done a lot of things last year, and remember that GST impact of low collections will also be felt in this upcoming financial year as well.
Sources are telling CNBC TV18 that promoters of Rossari Biotech are looking to sell stake in the company. Rachna, who has broken this news, is joining us with more. Rachna.
That's right. Sources have told us that promoters of Rossari Biotech are exploring options to sell stake in the company. Now, this has already been met with some early stage interest from global private equity funds as well as a listed strategic player. Now, discussions are still in exploratory stage with no binding offers on the table at this stage and no final decision taken by the promoters. People familiar with the matter tell us that the move is being driven by a lack of clearly articulated succession roadmap with no visible long-term plan on promoter transition disclosed close so far. Now, Rossari Biotech is a major Indian specialty chemicals manufacturer with a strong presence across textiles, personal care and performance chemicals. In the third quarter, the company reported a revenue of 581.68 crore rupees with a net profit of 32.77 crore. This when you compare it with a revenue of 512 crore and a net profit of 31.7 crore in the corresponding quarter a year ago, shows about a 13% improvement. It is also worth noting that in late 2025, promoter Sunil Srinivasan Chari transferred 15.89% of his stake as a gift to family members and a family trust through an off-market interstate transfer. That transaction did not dilute overall promoter holding, but it did restructure ownership with the promoter group. As of now, sources emphasize that the talks are non-binding. It remains to be seen whether this interest translates into a formal transaction, but promoters are definitely looking out, so we will be keeping an eye out for more.
We'll keep an eye out for that. 4.5% higher on Rossari Biotech. Rashna, thank you for that update there. And take a short break. Just as we do that, the countdown for Budget 2026 is underway with the most influential voices decoding and analyzing the impact and policy decisions from the Finance Minister. We bring to you a power-packed lineup throughout January and on the day of the budget, with market veteran Ramesh Damani and Helios Capital's Samir Arora for all things market, followed by JP Morgan's Sajid Chinoy to discuss the macro signals. We also get you insightful analysis from industry veterans and, of course, Dinesh Kanabar and Ashok Wadhwa for the tax rhetoric. Now, the markets have taken a bit of a tumble since we began the show. 190 points lower now on the index, still managing to hold on to that 25,200 mark though. But the one stock that has moved to the highs of the day is Strides Pharma. That's now up 10%, and that is after the company reiterated its US business sales outlook for FY28 at $400 million. They've also appointed a new CEO for the North America business as well. Margins have expanded, and as a result of which the stock has seen a very sharp up move. Numbers from AIA Engineering also on your screen, and numbers continue to trickle in through the course of the day. Now, US President Donald Trump is set to announce his replacement for the Fed chair later tonight. CNBC's Dan Murphy has more on this.
Christopher Waller, Kevin Hassett, BlackRock's Rick Reeder are the final four in the running. Of course, the other name on that list was Kevin Warsh as well. Traders betting on Warsh, though, according to Reuters. He met Trump at the White House on Thursday. The current Fed chair, Jay Powell's term, of course, ends in May. Trump has been criticizing Powell, who he had, of course, nominated in his first term, for not lowering rates fast enough, raising concerns about central bank independence.
Now, here's what Trump had to say about the imminent announcement.
I'll be naming the Fed tomorrow morning. I've chosen a very good person to head the Fed. I'll be putting that out tomorrow morning. I'd rather say it tomorrow, but just an outstanding person and a person that won't be too surprising to people. A lot of people think that this is somebody that could have been there a few years ago. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice. I hope so.
Meanwhile, in an earlier interview to CNBC TV18, Harvard University professor Kenneth Rogoff had spoken about the likely candidates. Listen in.
I mean, I had thought it was 80% it would be Kevin Hassett, who I think is a very good economist, by the way. A lot of my colleagues don't like him because they think he's too Trumpy, but I think we're going to get someone Trumpy, and Hassett is actually quite a good economist, and I think he'd be fine in the job. But that said, Trump made this announcement, I love you, Kevin. You're so good on TV. But when you're in the Fed, you're never on TV. I want to see you on TV. I'm sorry. But this is what you just never know what he intends. But it could be Kevin Warsh, who
I was going to ask you, one of the Kevins.
Yeah, I mean, Kevin Warsh would be a very strong appointment. Also, there's one or two other names.
On to some geopolitical news. Donald Trump also said that he was planning to talk to Iran amid rising tensions. He also spoke about the terms he has laid out for the talks. Listen in.
I have had, and I am planning on it, yeah. We have a lot of very big, very powerful ships sailing to Iran right now, and it would be great if we didn't have to use them. Okay?
Can you say what the message was that you shared with Iranians?
Well, I told them two things. Number one, no nuclear, and number two, stop killing protesters. They're killing them by the thousands. You know, I stopped 837 hangings 2 weeks ago.
We take a leave on this edition of Business Lunch. We leave you with the markets close to the lows of the day, but don't go anywhere. Midcap Radar begins the action for the final 2 hours of today's trading session.